Hi, so the electric car revolution is one of the hottest topics in the investing world right now. And I guess it's because we're all affected by the car industry. But today I'm not going to talk just about the electric car manufacturers. I'm going to talk about the traditional car manufacturers as well. We're going to look at Toyota, Ford, GM, and then the electric car manufacturers, Tesla and Nikola as well. And look, I know there are plenty of other manufacturers out there, but I think by just taking a look at these five, you'll see what I think is the big problem within the industry. And if you're new here, well, welcome to my channel. My videos are about investments that anybody in the world can make. Now, before I start getting into the details about this video, I want to make it really clear that I actually personally, I hate cars. Look, I hate traffic. I hate spending money on cars. I hate expensive cars because I think they're pointless. And I also think cars are just super dangerous. Okay, that was pretty bleak. Obviously, I know that we need cars and they're very important. I much prefer to get a taxi to the airport than try to catch some other type of transport, maybe a marshrutka because I'm here in Kiev. I'd much prefer to take a taxi, so I know they're important. I just thought it'd be important to point out that I have a very strong bias against cars. So right now we're in this weird transition period because we're still very reliant on petrol and there's really only about 1% of all the cars out there that are electric. But it is very clear that electric cars are the future. All the car manufacturers have acknowledged this and it's just really a fact now. So it's a race now to develop manufacturing capabilities that provide solutions that are both efficient and cheap. Right now there's also growing environmental pollution concerns and governments around the world are trying to incentivize the acceleration of the electric car industry. So for those manufacturers who aren't going to adapt, they're going to go out of business. Now, we've already said that the car industry is definitely going to be electric, but right now, well, it's really just not practical. There is a massive lack of charging stations to encourage people to go electric, but no one is going to start charging stations until there are just more electric cars. Look, it's going to be really slow to roll out this infrastructure and it could take decades, so therefore petrol probably still will be the leader over the next 10 years. Now, most electric cars don't have good enough ranges between charges, and with a lack of charging stations, well, it makes driving an electric car outside of the city, well, still a bit of a problem. And also manufacturing costs are significantly higher. Therefore, electric cars are more expensive right now. So we're actually kind of in this awkward phase where the future is obvious, but we can't really get there fast enough. So we're going to have to be patient because it's going to take time for each country to roll out the infrastructure and the car manufacturers to transition. The next big change in the industry is the driverless movement. Now, this gets me really excited. I just can't wait for a world where we don't have to drive cars anymore. I think most importantly, it's going to make our lives far, far safer. I know it's going to take time to trust a computer, but drink driving, road rage, falling asleep at the wheel, they're going to be things of the past. I also think that autonomous cars are going to be far more efficient drivers anyway, so there's going to be far less pollution, there's going to be far less traffic congestion on the roads as well. The reason I think this is because the technology is going to allow the cars to drive a lot closer together, take up a lot less lane space. Plus, they're going to be so much more efficient than all the human errors that we make. So they're not going to have all these car accidents and things like that. Traffic's just going to flow so much more smoothly. In nearly every major city across the world, the drive to the airport sometimes can be 30 minutes, but sometimes it can be 2 hours because of congestion. Well, that's just not going to be a problem anymore because every time you drive to the airport, it's going to be pretty much the exact same. And for all those people out there who commute every day, maybe they spend 1 or 2 hours in a car, well, now they'll be able to nap, they'll be able to watch movies, they'll be able to have business meetings. It's going to be far less onerous. I absolutely love this future world of driverless cars. Experts still believe it's still 20, 30 years away. So look, I will just have to wait. Hopefully my children will never have to drive a car. So I think many people are going to choose to not own a car anymore and they're just going to sign up to a car usage service, something like we already do with Uber and Lyft. It already makes a lot of sense for people living in a city, but it's very convenient to have a car, especially when you need to get out of the city. But as the autonomous vehicle world starts to become a reality, well, it's going to become less and less necessary to own a car. Now, I haven't talked specifically about any of the car manufacturers yet, but my understanding is that they all have plans to go electric and to go autonomous. Some of these companies are further along than others. For example, Tesla. The fully electric manufacturing operations, they have it already in place. They're definitely leading the world regarding awareness and adoption, and they're one of the major players in the market. Okay, Nikola. Now, I want to say this while I have the chance. They have no proven product, no proven technology, and no clear path to mass scale production. Part of me is worried this is actually all just a big scam. Plus, hydrogen charging stations don't really exist, so even if they do make a product, they have no infrastructure. If you respect your money, please just don't invest in this company. Toyota. Now, the Prius was one of the first hybrid cars that popularized electric vehicles. And Toyota now has manufacturing operations that can create electric cars. They will be a major player in the market. Ford, the company that started it all, and well, they've been struggling to adapt of late. The industry is changing and Ford is going to need to adapt quickly, otherwise they're at risk of going out of business. Maybe there is an opportunity here for an investment in a company that is completely out of favor and completely unsexy. General Motors. Now, General Motors have been trying to make progress into the electric and autonomous worlds. Recently, Honda and GM made a deal to work together in finding a solution, but really they are the dinosaurs of the industry. Look, maybe they can turn it around. From a stock market point of view, it doesn't get much more unsexy than Ford and GM. Now, with any business, to check their financial health, we want to look at these three areas. We want to see whether they can handle their debt, whether they're growing, and are they a well-managed company. So what I'm planning to do is put these 5 car companies against each other from a financial point of view to see which one comes out as the best. Now, don't worry about the terminology that I'm going to be using here. Just sit back and relax and just try to get a feel for what's going on. It's part art and part science anyway. Now, it's really important to look at the company's debt because businesses generally can't go bankrupt if they don't have any debt. Unmanageable debt is the #1 reason that companies get into trouble. So to see if a business can handle its debt, what I do is I look over the debt to equity ratio and the current ratio. So normally I want to see below a 0.7 here. And for all the companies, they are not even below a 1. This is the first big issue I see in the car manufacturing industry. They are heavy on debt. Nikola appears to be 0 here, but they actually have huge amounts of debt. It just isn't recorded as long-term debt. Rather, it's called other long-term liabilities. Now, don't let this fool you. Nikola are practically 100% debt. Now, when we look at the current ratio, it needs to be higher than a 1. Otherwise, they will need to find more debt or sell some assets this year. It's a bad sign. I actually want to see the current ratio above a 1.5 generally. Now, they are all above the #1 here, which means they are going to be okay in the short term, but they really don't have much room for mistakes here. But with those large debt to equity ratios that we saw earlier, well, I'm just going to have to give them all across here. Now, in the finances to check for growth, I look at the book value per share, the earnings per share, the gross margins, and the operating cash. So some good news here that the book value per share has been growing for all of the companies. Tesla and Toyota are both very good. Now, this is the earnings per share graphs for each of the companies, and Toyota has been stable for the last 5 years. Ford, as you can see, has been declining. GM has also been stable, and well, Tesla has been growing, but it's only just turned positive this year. Now, this is gross margins, and it's something that I've started focusing a lot more on lately. A company that can grow their gross margins is doing a lot of things right, and this is exactly what I want to see in an investment. Big gross margins and growing gross margins. Now, Nikola doesn't have gross margins because they don't sell anything. Seriously, if you're investing in Nikola, you have been sucked in. If any of my friends and family were invested in Nikola, I would be kindly suggesting that they get out immediately. Okay, so gross margins is actually one of the major points of this entire video. Companies that cannot deliver strong gross margins, say upwards of say 30 or 40%, will always find life difficult. I have just recently been looking at the computer game companies of Electronic Arts, Activision Blizzard, and Take-Two Interactive, and they have gross margins all pushing 75%. Now, comparing that with the car industry, where 20% is hard to reach. There is just not much profit in these businesses, and that sucks because more profitable businesses can invest these profits back into the business to grow. Whereas these companies, well, they need debt to grow, and it's just not a great industry to be in. Now, we can't just go have meetings with the management team to make sure that they're making some good decisions. But there are some telltale signs in the financials that will let us know whether management are doing some good things. So today I'm going to look at the return on tangible equity and their free cash flow. Now, I've decided to cut Nikola out from now on because I just don't want anyone to invest in them. Now, Toyota and GM have decent return on tangible equity. I like to see this above a 15. So GM is actually the best here. Now, these are the free cash flow graphs, and Toyota and Ford have kept positive free cash flow per share, whereas GM and Tesla have only just recently turned positive. Nothing reliable here, I don't think, from any of them. Now, at the moment, before I look at the valuations, I don't really want to invest in any of these companies. And the big 2 reasons why is because they have high levels of debt and they have pretty poor gross margins. But these companies are not worth nothing, right? Well, what I mean is, if someone was going to give me shares for free, well, I would take them. So at what price would I actually buy shares in these companies because they're just too good of a deal? Okay, normally what I would do is I'd pull out my intrinsic value calculator here and make a decision based on the future cash flows that the company is going to return to us. But what I haven't mentioned yet is the car manufacturing industry is actually cyclical. What I mean by that is when the world economy is not doing very well, these companies aren't doing very well either. But when the world economy is going okay, well, these companies are going okay. So in my opinion, I'd prefer to value them based on a price to book valuation method. This is just really simple. It just means I'm trying to buy shares in the company at about 50% discount to what the equity of the business is. So if they have $1 million worth of cars, but I could buy those cars for $500,000, then it's a good deal. So the price to book values for Toyota, Ford, and GM are all around about 1, which means I think it's around about fair value right now. So I would want a 50% discount from the current share prices before I'd even consider buying these companies. Even then, oh, that high debt, I don't like it. Now, Tesla here is maybe more of a tech company than it is a car manufacturing company. Look, the price to book value is just out of control. Their current stock price is just not even close to what I'd be willing to pay. As you can see, I wouldn't pay more than $20 for Tesla shares. Now, I know that's going to be controversial and everyone thinks I'm going to be crazy for it, but I don't really care because that's what it's really worth. And that's what a car manufacturing company should be worth. Now, Nikola, I've already touched on. I don't even think they are a business. I can't believe they're even worth something today. So look, if someone was going to give me shares for free, I'd probably take them, but I'm not wasting any money at all. So do I want to invest in any of the car manufacturers? Now, like I said at the start of this video, I really don't like cars, but it's not the reason why I don't want to invest in the car industry. For example, I actually don't like the oil tanker industry, but I have invested heavily in this space because the businesses here, they have completely manageable debt and they're at just such discounts to fair value. All these car companies have high debt, and I know that's normal for the industry, but it doesn't mean I'm going to accept it. And then on top of that, the gross margins are awful and the valuations are not discounts at all. So I guess you're wondering, which car company do I think is best? Well, none of them are a good investment, but I think Tesla, because of their strong brand, is probably the best of these companies. But the hype around this company, well, it's just way too much for any sort of investment. So I think buying a car is a bad investment and investing in any of the car companies is also a bad idea. Now, I'd love to hear your thoughts on this investment because I think a lot of people out there are going to have different views on the car companies. And I'm fully aware that I'm very biased, so some other opinions would be really good. But please hit subscribe if you enjoyed this analysis and I will see you in the next video.